I don't want to waste your time, so there will not be an intro. Instead, what I'm going to say is that this video might seem long by the duration, but actually I'm going to show you as quickly as I can how to buy stock in Etrade through the browser. All those extra minutes you see down below are for more advanced stuff, such as getting the best possible price for your stock, or playing within Etrade Pro to make these trades, or how to sell the stock after you got it. But for now, we're just going to go through a very basic entry for buying stock within Etrade Pro, or within Etrade via the browser. And that's exactly what we're doing right now. So we're going to start with the Etrade browser. You log into your Etrade, you click on trading right here, and then you click on stock/ETFs. If you don't know, ETFs are exchange traded funds. It's essentially buying a basket of stocks instead of just buying one stock. Now, here's what we're going to start with. We are going to click on symbol, which is what you have to do because you have a stock in mind that you want to buy, ideally, and you're going to put in the ticker for that stock. And let's say it's something very popular like Apple. All right, we put in the ticker for Apple. Now what pops up is the last price at which that stock traded, the bid, and the ask. Those are the important numbers here. The last price is literally the last price at which someone bought and sold the one share of Apple, or more than one share. And the last bid and the last ask, the ones that you are seeing now, those are the current prices at which you would get should you use a market order, which I'll show you in a minute. But think of it this way. Every sale of a stock is like an auction. We have people right now who are saying they're willing to buy Apple at 174.14, and we have people who are saying they're willing to sell Apple at 174.19. Eventually, someone will step in and say, okay, I'll buy at 174.19, or someone will step in and say, okay, I'll sell at 174.14, or within that range. This is called the bid-ask spread, and it's very important in getting the best price you can for your purchase of a stock. But for now, let's just say your goal is simply to buy the stock at whatever price it's trading at currently. What you do is you select here in action, you select buy, because you're buying, of course, and you select the amount, type in the amounts you're willing to buy. Let's say you want to buy 100 shares of Apple. All right, once you do that, select price type and select market. This is the default. What you're going to get is the estimated total cost based on the current market price. If you can accept that, you just go ahead with this and you can preview your order. You have one more option here. The duration is not an option for a market order, but your other option, you can see here, but your other option is either all or none, which means that, let's say you must get this order filled today. You need to buy 100 shares, and maybe there are 99 people who are willing to sell to you at that price, but not 100. In that case, if you want to say, forget it, if I don't get 100, I don't want any, then you click all or none. If you're okay with getting 99 at that price, and maybe you have to enter another order for that last one, then you don't click all or none. In general, you don't need to click all or none, especially if you're doing a market order. You're almost always going to get your order filled. Click on preview order, and that's it. You're done. Now, let's go back to what I was saying about this bid and ask spread, because it is really important in terms of getting the maximum profit out of a trade. Here we see the bid and ask spread is very tight. We call it tight because there's only 5 cents between the bid and ask. And this is an expensive stock. That's less than 0.01%. So, I mean, if I was going to buy this, I don't care. I would go with the market price. I just get the order filled, get in. Especially if I'm day trading or I'm watching the candlesticks and I see a pattern that I recognize as a pattern that's going to lead to the stock rallying. I want to get in as soon as I can, so I'm just going with the market order. It's a tight spread. But what if it's not a tight spread? What if it's a very unpopular stock? I don't know what I'm typing here. I forget what it was. What's an unpopular stock here? OXBR. Alright. So OXBR, you can see the bid and ask are about 14 cents. Difference is 14 cents. Still seems small, but this stock's only trading at $6. So a 14-cent difference in terms of percentage is pretty large. 14 out of 601, that's a 2% difference. So I would be picky here, and yeah, I'm still going to buy the stock. I'm going to buy 100. You always select action buy, quantity, whatever amount of shares you want to buy. But if you want to get a good price, you're going to have to select limit, not market. Select limit, and then put in the price that you're willing to pay. Now, if you put in 615, you're essentially doing the same as what a market order would do for you. You don't want to do that. You want to get a better price. You can't put in 601 because that's the bid price. You can put it in, but you're not going to get filled. Because if that bid price is still 601, it means people are saying, I will buy for 601, but no one's saying they'll sell. So the best you can do is 602. But generally, that's not going to get you filled either. You want to get no more toward the middle of the bid and the ask. So you might take the average. You might add the bid and ask, divide by 2, get that average, and put in the midpoint. But honestly, what I do when I want to get the best possible price for the stock is I really do start as close as I can to the bid, but over it. And then I put in the order just like you saw me put in the order for the market. Put it in that order. If it doesn't fill, cancel it. Come back to this page. Move it up a penny. Try it again. If it fills, great. If it doesn't, come back. Move it up a penny. You'll usually get filled pretty close to the midpoint of the bid and the ask spread. I imagine you put in 6.10 right here. You're going to get filled because it's closer to the ask than the bid. And that's way better than the market price. You'd be saving 5 pennies for every 1 share. Now, when you put in a limit order, you have more options for this duration box. I always stick with good for the day because I watch my trades. But if you're a very busy person, or if you're playing like a long-term strategy, you might say good for 60 days. Now, immediate or cancel, fill or kill, these are usually for day traders. You want to get it filled right at this price. You don't want to walk away from your computer, see the price go down, and then end up having to pay more than what you would have rather expected to pay. Anyway, I usually just leave this as good for the day. The main difference, what I'm trying to say here, between the market order and the limit order is market order is you just put it in if one of 2 situations. One is the bid and ask are very tight, so that difference of pennies that you would save doesn't really matter in the end. Or in the case of you need to get the order filled right away. In all other situations, I would select limit, and I just kind of slowly move from the bid up to the midpoint until you get that filled. All right, so that covers putting the trades in via market or limit in the Etrade browser. Now, if you download Etrade Pro, I believe everyone has access to Etrade Pro. When I first started trading Etrade, that wasn't true. You had to have made a certain amount of trades per month or per year. But I think you're able to get this software if you're Etrade member, and all you have to do once you got this software in here, it looks a little daunting. Don't be daunted. Let me actually minimize this. All you have to do is click trade. Once you click trade, you get the equivalent of the browser page you just saw, and you follow the same steps. So symbol, we're going to put an apple here. Quantity, whatever you want, 100. Market, I'm going to buy it at market because the bid and ask are spread, or bid and ask spread are tight, you can see here. And destination's your extra option here. We don't care. Auto, this is which exchange it goes through. We don't care about that. But everything else is the same as on the browser. Now, why would you want to use Etrade Pro when you can use the browser? The immediate answer I have, the most logical answer I have, and the reason I personally use Etrade Pro to put in my trades is when the market is open, which it's not right now. What you're seeing is not a market open, because if the market were open, this bid and this ask would be constantly changing. and you'd be able to monitor it while you put the trade in. The browser does not allow that. Once you boot up, once you type in here, let me refresh this page. Once you type your symbol in the browser, that's the wrong symbol. Type in one-handed here. That is a fat finger. All right. Once you type your symbol in the browser, you're going to get bid and ask. And if you leave the browser up even for like an hour, these numbers are static. They won't be changing. However, in Etrade Pro, when you put in your ticker, these bid and ask, the last price and the amount that is changed, these will be constantly moving. So you can monitor it while you're inputting the trade. So if suddenly the stock changes, if you're going to put in, for example, a limit price of 174.15, and while you're typing that, you notice that Apple has fallen $1 or 14 cents, and now it's at 174. You could double check and be like, "Oh, I almost paid way more than I could have. I could have saved a lot of money," but you accidentally, or you weren't monitoring the prices. So my meaning is, if you're going to be scalping, if you're going to be trying to get the best price for your trade, you're going to probably be wanting to use Etrade Pro so that you can monitor the actual price and the bid and ask while you put this in. Because even typing in the quantity and selecting the price type and putting in the price can take you a bit of time. And you might find by the time you've entered the price has gotten a lot cheaper. So now you can push it down even further, save some more money. I think that covers pretty much it. I said I would tell you how to sell a stock. All right, so once you've got a stock in your account, just come back to this page, choose sell, choose the quantity, and everything else is the same. Market. The big difference between buying and selling is simply when you're using the limit order. Everything else is the same if you're going with market. But if you're doing a limit order, like I said, you want to start at the bid and go up for buying. Well, for selling, you want to start at the ask and go down. Just the opposite. So put in your limit price, 466.30. That's what you want, but someone else is asking for that, so you're not going to get that. So keep going down a penny at a time. You can do the same thing here. Stock, whatever. This page is the same, but you're clicking sell instead of clicking buy. Everything else is the same. I think that covers everything. If you have any questions or you have a request for a certain video, please let me know. And subscribe and check out the description below. I've got a lot of info in the description below you could probably get some useful advice from. Make sure you leave a comment, and that's pretty much it. Thanks, guys.